Good evening. In tonight's business segment, we turn our attention to a significant development in the global precious metals market. Reports indicate that gold demand in Asia is experiencing a notable increase, reflecting broader trends in regional consumption and investment patterns. This surge in interest is capturing the attention of market participants worldwide, as Asian markets have historically played a pivotal role in the global gold trade. The update, covering developments through 2026, provides insight into the scale and implications of this growth. Gold, long recognized as a reliable store of value, continues to maintain its appeal across multiple Asian countries. Analysts note that both individual and institutional investors in the region are actively acquiring gold, contributing to a measurable rise in overall demand. This heightened activity encompasses a range of sectors, including jewelry, investment holdings, and central bank reserves. Each of these components plays a critical role in shaping the overall market dynamics and influencing price trends. In particular, consumer behavior in key Asian economies is a driving factor behind the increase in demand. Cultural traditions, economic factors, and regional wealth accumulation contribute to the sustained interest in gold. Markets in countries such as India, China, and several Southeast Asian nations are seeing substantial engagement from private buyers who consider gold a preferred asset for savings, financial security, and wealth preservation. This pattern of consumption underscores the continuing relevance of gold in daily economic life, as well as its function as a hedge against financial volatility. Central banks across the region are also participating in the growing appetite for gold. Official institutions are reported to be increasing their gold holdings as part of broader reserve management strategies. Such moves are closely monitored by global markets, as they not only reflect internal monetary policy decisions, but also signal confidence in gold as a strategic reserve asset. These purchases, conducted alongside private sector acquisitions, contribute to the aggregate increase in demand, reinforcing Asia's influence on global supply and pricing structures. Furthermore, trade flows have adjusted to accommodate this rising demand. Import and distribution channels are expanding to meet the needs of consumers and investors, while gold producers and suppliers are responding to the increased appetite by allocating resources to markets where demand growth is most pronounced. Logistics, storage, and retail frameworks are being optimized to ensure that supply aligns with consumption patterns. The interaction of these factors illustrates the complexity and scale of the current gold market in Asia. Economic conditions in the region are also relevant to this development. Factors such as income growth, financial market stability, and consumer confidence are creating an environment conducive to increased precious metal purchases. While gold demand has historically experienced cyclical fluctuations, current trends indicate a sustained upward trajectory, highlighting the resilience of the market. Market analysts continue to track these movements carefully, noting that the dynamics of gold consumption in Asia can have significant implications for global price levels and investment strategies. In summary, the latest data for 2026 shows that gold demand in Asia is not only growing, but doing so across multiple sectors and market participants. The combination of cultural factors, consumer behavior, central bank activity, and economic conditions is driving a substantial increase in purchases, affecting both regional and international market conditions. This ongoing development underscores the importance of monitoring Asian gold markets for insights into broader global trends. As we explore this story further, the next segment will provide a detailed breakdown of the specific countries leading the surge in demand, the sectors that are contributing most significantly, and the measurable impact on regional and global supply chains. We will examine the interplay between consumer purchases, institutional acquisitions, and trade adjustments, offering a comprehensive look at how this increase in gold demand is unfolding across Asia. Continuing our coverage on the rising demand for gold in Asia, we turn now to a closer examination of the countries that are driving this increase. Data from industry reports highlights that India remains one of the largest consumers of gold in the region. The market there is characterized by consistent purchases for jewelry, personal investment, and ceremonial purposes. Gold continues to hold cultural significance in the country, particularly in relation to festivals, weddings, and traditional savings practices. In 2026, reports show that both retail and wholesale channels in India are experiencing robust activity, indicating that consumer interest remains high across multiple segments of the population. China, another leading market, has also seen an increase in gold acquisitions during the current year. Investment demand, particularly in the form of bullion and gold-backed financial products, has expanded significantly. The country's growing middle class, combined with rising disposable incomes and heightened awareness of financial planning, is contributing to increased engagement with gold as an asset. Chinese consumers are actively participating in both physical and digital gold markets, reflecting a diversified approach to securing the metal as a store of value. In addition, the strategic purchases by Chinese financial institutions and state entities are supplementing the demand generated by individual investors, further strengthening the market. Southeast Asian countries, including Thailand, Malaysia, and Singapore, are also notable contributors to regional gold demand. Retail gold outlets, investment products, and central bank acquisitions collectively reflect an upward trend in consumption. Economic stability and favorable market conditions in these nations have created an environment in which consumers are more likely to allocate resources toward precious metals. In particular, Singapore functions as a regional hub for gold trade, attracting both domestic and international buyers who rely on the city-state's regulatory framework, storage facilities, and financial infrastructure. These developments demonstrate that gold demand is not limited to a single country, but is spreading across multiple national markets in Asia. When examining the sectors contributing to the surge in gold demand, the jewelry industry stands out as a primary driver. Jewelry consumption remains a significant component of total demand, reflecting both cultural preferences and gifting traditions. Retailers across major cities report higher sales volumes, particularly in items such as necklaces, bracelets, and rings. The patterns indicate that the combination of personal investment and aesthetic value continues to underpin consumer interest. Jewelry demand, while long-standing, appears to be reinforced in 2026 by favorable economic conditions and consumer confidence in gold as a stable asset. Investment-driven demand represents another major factor influencing the regional gold market. Investors are acquiring gold bars, coins, and certificates as a hedge against inflation and currency volatility. Financial products linked to gold, including exchange-traded funds and digital investment platforms, are also contributing to the overall demand. Market analysts note that this trend reflects a methodical approach to wealth preservation, with buyers increasingly viewing gold as a long-term asset that complements other forms of investment. The combination of physical and financial acquisitions highlights the diversity of strategies employed by investors throughout the region. Central bank activity is further reinforcing the upward trajectory of gold demand. Several Asian central banks have announced additions to their reserves in 2026, reflecting both diversification strategies and confidence in gold as a stable asset. These acquisitions, while smaller in scale compared to total private consumption, play a critical role in shaping market sentiment. Observers note that central bank purchases provide a steady underlying demand that can influence price stability and investor confidence in the broader market. Trade and supply channels are also adapting to meet this heightened demand. Gold imports, distribution networks, and storage facilities have expanded in response to growing consumer and institutional activity, Industry reports indicate that logistics infrastructure is being optimized to ensure timely delivery of gold to both retail and investment channels. These operational adjustments are necessary to accommodate the increasing volume of transactions and to maintain market efficiency, reflecting the interplay between rising demand and the capacity of supply chains to respond. As we continue to examine the factors behind this surge, it becomes clear that gold demand in Asia is shaped by a combination of cultural, economic, and institutional drivers. In the next segment, we will analyze the second half of the market dynamics, including the specific impact on supply availability, pricing trends, and the interaction between regional consumption and global gold markets. We will also explore how recent developments in trade, production, and storage are affecting the broader market outlook, providing a complete picture of gold activity in the region for 2026. Continuing with our in-depth look at gold demand in Asia for 2026, we now turn to the second half of the detailed market breakdown, focusing on supply, pricing trends, and the broader implications for regional and global markets. One of the key considerations in this context is the availability of gold within the region. Reports indicate that as demand increases, both domestic and imported supplies are being closely managed to ensure that markets remain adequately stocked. Producers and distributors are adjusting production schedules and logistical operations to align with consumption trends, reflecting the practical challenges of maintaining a balanced supply chain amid rising demand. Imports play a particularly significant role in sustaining market activity. Countries with limited domestic gold production are relying on international shipments to meet the needs of both consumers and investors. Import volumes have reportedly increased in response to strong purchasing activity, with trade channels working to accommodate larger volumes efficiently. This includes enhancements in storage infrastructure, distribution systems, and retail operations, ensuring that gold reaches end users promptly and reliably. Supply chain coordination has therefore become a critical factor in supporting the overall market expansion across Asia. Pricing trends in the region are also influenced by this dynamic of rising demand and adjusted supply. Analysts report that increased purchases, particularly from large consumer bases and institutional investors, are exerting upward pressure on local gold prices. While the global gold price serves as a benchmark, regional markets may experience slight deviations due to shipping costs, import duties, and other logistical considerations. These factors combine to create market conditions in which prices reflect both international trends and regional consumption patterns, highlighting the interconnectedness of local and global gold markets. Another important aspect to consider is the role of trade hubs in Asia, which facilitate both domestic consumption and cross-border transactions. Cities such as Singapore, Hong Kong, and Dubai act as central points for the redistribution of gold across the region. These hubs provide secure storage facilities, financial services, and logistical support for buyers and sellers, ensuring that gold can move efficiently from production or import points to end consumers. The prominence of these hubs underscores the sophistication of the regional market infrastructure and its capacity to support sustained demand growth. In addition to these operational and logistical considerations, market participants are closely observing the influence of investor behavior on the overall dynamics of supply and pricing. Physical purchases by individuals and institutions contribute directly to demand, while investment vehicles, such as gold-backed financial products, provide an additional layer of market participation. This combination of physical and financial engagement helps explain why the current growth in demand is multifaceted and resilient. Analysts note that such activity can also influence short-term market fluctuations, as shifts in investor sentiment or purchasing patterns may result in temporary supply constraints or price adjustments. The interaction between central bank reserves and private sector demand is another factor that shapes market conditions. Central banks, by adding gold to their reserves, provide a stable source of demand that can influence broader market confidence. At the same time, private investors and consumers continue to acquire gold in substantial volumes, creating a cumulative effect on both availability and pricing. This interplay highlights the importance of monitoring multiple layers of demand when assessing the regional gold market, as both institutional and individual activity collectively contribute to the observed trends. Regional economic indicators also play a supporting role in shaping gold demand. Factors such as currency stability, inflation rates, and overall economic growth influence purchasing behavior and the allocation of assets. Reports suggest that favorable economic conditions in several Asian countries are contributing to a climate in which consumers and investors are more inclined to acquire gold. This trend reinforces the notion that gold remains a highly valued asset for financial security, savings, and wealth preservation. Finally, the broader implications for global markets are noteworthy. Asia's rising demand for gold has the potential to impact international supply chains, trade flows, and pricing benchmarks. Countries and markets outside the region closely monitor these developments, as shifts in Asian consumption can influence global trade patterns, bullion availability, and market sentiment. The combination of domestic consumption, import activity, central bank participation, and investment engagement establishes Asia as a critical driver of the global gold market in 2026. In the next segment, we will summarize these developments, providing a clear overview of the key factors driving gold demand, the sectors contributing most significantly, and the implications for regional and global markets. We will conclude with a concise review of the main points from this update, highlighting the ongoing importance of monitoring Asia's influence on the precious metals sector. In summary, the latest 2026 update confirms that gold demand in Asia is experiencing a notable increase. This surge reflects activity across multiple countries and sectors, including private consumer purchases, investment holdings, and central bank reserves. Key markets such as India, China, and other Southeast Asian nations are contributing significantly to the overall growth, demonstrating the region's continued importance in the global gold market. Cultural factors, long-standing traditions, and economic conditions are central to understanding this development. In many Asian countries, gold remains a preferred asset for both financial security and ceremonial purposes, ensuring steady demand from a broad range of buyers. At the same time, institutional activity, including acquisitions by central banks, adds an additional layer of engagement, reinforcing the total volume of gold entering the market. Trade and supply channels have adjusted to meet the rising demand, with imports, distribution networks, and storage facilities adapting to ensure availability. Retail and investment markets alike are responding to these trends, maintaining the flow of gold to end users while reflecting the ongoing interaction between consumption and market infrastructure. Overall, the increase in gold demand across Asia in 2026 highlights the region's critical role in both regional and global markets. Observers note that this activity represents a combination of cultural, economic, and institutional factors, each contributing to the overall growth in consumption. As this development continues to shape the market, it underscores the enduring significance of gold in Asia, both as a financial asset and as a culturally valued commodity. For investors, policymakers, and market participants alike, the current data provides a clear perspective on the scale and scope of gold demand in the region. This concludes our coverage of the 2026 update on why gold demand is rising in Asia, providing a comprehensive overview of the factors driving the increase and the implications for markets across the region.